Hey guys, and welcome to the Working Money Channel. Bitcoin goes up and Bitcoin goes down. Right now we're hovering around 11,600 for BTC. And yesterday I did create a new level of resistance here on the chart. What Bitcoin did yesterday after I posted yesterday's video, of course this is what happens. It goes up. It reached the $12,000 mark and then promptly shot right back down to a low of about 11,200. And now we're hovering around the 11,600. And again, guys, this is a psychological level, $12,000. We saw it retrace here. Okay, so it was from this level to this level here. Okay, we saw a little bit of a movement upward. That isn't so significant. This is the significant one because once we break this level here, so this level is between 12,007 or 12,800 to roughly 13,200, somewhere in that supply zone. Once we hit that zone and break that, pierce right through that, the next stop is 13,800, 13,900, ultimately 14,000, and then we're off to the races. Then the next stop is 20,000. Once we hit 20,000 and pierce that though, that's what's going to be interesting. Will that trigger alt season? It could very well. Right now we're seeing alts kind of flounder, and this is a par for the course. We haven't really seen alts do really well until Bitcoin has established a footing, and we know it's ultimately just a matter of time before the FOMO kicks in. People dump their money into alts. Right now we're treating this market as it is, a spec market, and so until speculative investors start really dumping their money in, we just have to eye Bitcoin in the meantime. And this from the Daily Hodl, for shame. Shark Tank's Kevin O'Leary blasts Anthony Pompliano's crypto portfolio. And so you guys know Kevin O'Leary from Shark Tank. Entrepreneur and Shark Tank star Kevin O'Leary just faced off with Morgan Creek Digital's co-founder Anthony Pompliano on CNBC's Fast Money over the future of Bitcoin. When questioned by O'Leary about the amount of Bitcoin in his portfolio, Pompliano confirmed that more than 50% of his net worth is in the world's most popular cryptocurrency. O'Leary, who has emerged as a prominent crypto critic, was not impressed. I forbid that. That's insane. That breaches everything about diversification investing. That's crazy. O'Leary, that was his quote, not mine. O'Leary says putting that much money into any single asset violates the principles of diversification. The Canadian businessman recommends investing only up to 5% in any one company's stock. He adds, I teach this stuff. You never go beyond concentrations of that nature. 50%, shame on you, that's nuts. But here's what Anthony Pompliano said, and this is great. Putting the size of the allocation aside, Pompliano says at this point, it's irresponsible for financial institutions to not have exposure to BTC. And then he explains, we are now entering a position where it's irresponsible for institutions to not have exposure to this asset. And the reason is their job is to find assets that actually can provide non-correlation to the markets. When your financial institution puts you in a bunch of stocks and bonds and blah, 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 whatever, it doesn't really matter what blue chip or green chip or red chip or whatever they're putting you in. Ultimately, if the market tanks, the entire market is going to tank with it. It's kind of like with crypto. When we see Bitcoin go up, a lot of these cryptos go up, albeit not as much, but they still do correlate to Bitcoin. It's the same with the stock market. If you look at the S&P 500, let me just show you guys this quickly. S&P 500 on a weekly. Let's do a weekly because I just want to show you the crash, okay, of 2008. This was 2008, and you put in the best performing stocks and you will still see that they had also crashed during that time. You put in Home Depot, for example, and so this is 2008, okay? Around that time of the crash, we saw Home Depot went down from its high up here, $42, and it went all the way down to $17. Okay, Microsoft. Okay, same kind of thing here. This was the height of the crash here. This was late 2007. Microsoft went from a high of $37, went down to a low of $15. J&J, Johnson & Johnson, let's just throw that up there. And same kind of thing here, okay? $72 in late 2008, and by March 2009, at the bottom of the crash, $47. And these are some of the best stocks you could buy at the time, and they still dipped quite a bit, so you can imagine what the not-so-great stocks did at that time. So this is the thing that Anthony Pompliano is explaining. Bitcoin is a non-correlated asset that these companies should be putting their customers in so as not to have that same market exposure that any of these other stocks will have you exposed to. So he says, especially in times of global instability, instability where there's likely to be market drawdowns, Bitcoin is providing just that. It's just data. It's math. It's not personal opinion. It's not somebody else's opinion. The math suggests that it's non-correlated to negatively correlated to major asset classes. Amazing, simply amazing. And I try to even tell, people in my personal life who are investors, I'm like, look guys, cryptocurrency is not correlated to the markets the same way many other traditional products are. They're like, well, I could just invest in gold. It's like, yeah, you can invest in gold if you want. But in my opinion, crypto's the winner of today's generation. This on Twitter, XRP_Canada. On Twitter. Hold up, Mr. Rao. Are you saying what I think you're saying? Ripple, XRP, and the Federal Reserve are connected? Wait. Just yesterday, it was suggested that the Federal Reserve and the FedNow initiative was not going to be using Ripple and XRP, or were they? It was still a big question. But it looks as if, even though Dilip Rao may be backtracking in this tweet, let me read this tweet. So this XRP_Canada links to this. It's Dilip Rao's tweet, Dilip Rao from Ripple. Great move. FedNow will drive the transformation to real-time payment infrastructure around the world, both domestic and cross-border. And so he links to the Fed Payments Improvement website, which has this article here. And so this is essentially just summarizing Lael Brainard's speech from the other day, talking about the FedNow project, talking about how it's a 24/7, 365 real-time gross settlements, and it's for the entirety of the U.S., all U.S. citizens, small businesses, big businesses, all kinds of banks in here, basically just summarizing what we heard yesterday. So guys, I'll link this in the description if you want to read this further. But ultimately what he's saying is that this move will essentially transform the real-time payment infrastructure. And then he follows up by saying, to be clear, my comments are only what they state. Please do not read any more into it. A, Ripple will announce any projects when public. B, my role gets me excited about payment infrastructure, boring to most. C, hashtag cool your jets. And that's been Mr. Dilip Rao's buzz phrase, when people are getting too excited about their XRP investments. And will the price go up because of X, Y, or Z, whatever? It's become his thing now. Cool your jets, and now he's even adding a hashtag to it. So, okay, the jets are cool. Until I saw this from XRP Yoda, FedPay Improve, published on the 10th of February 2016. So this was from a while ago. And this is interesting because it shows a YouTube clip from none other than the Fed Payments Improvement YouTube official site. So when I click on this, I'm not going to play the video, but this looks as if it's from the official Federal Reserve YouTube page. And essentially, back in 2016, they were showing this video with regards to Ripple, a real-time payment settlement network. And so it's essentially just a video explaining what Ripple does. Pretty innocuous, but the fact is that this is on the Federal Reserve's official YouTube page. And just to prove that even further, XRP Yoda has done his research to add more evidence that this post is from the Twitter page, showing that it isn't a fake YouTube website. So it links their official Federal Reserve, so they're called Federal Payment Improvement, at FedPay Improve on Twitter. It links their official Twitter website to their YouTube channel, and some screenshots to prove that. So that just goes to show you that the Federal Reserve has known about this the entire time. Could they be using XRP? Could they not be using XRP? Guys, here's how I think it went down. Something along the lines of this, and this is just what I think. I don't actually have any proof of this, but didn't you find that this kind of came at a very, very convenient time, and it happened very, very quickly? First, we had the Facebook Libra announcement. It kind of shook people up a little. Okay, Facebook coming up with their Libra coin, perhaps challenging the US dollar in a lot of ways. I feel like the industry was scrambling a little bit, and I feel like this was already in the works. But then the Federal Reserve lays this bomb on us. The Federal Reserve will build and operate a 24/7, 365 real-time gross settlement service to support faster payments. And not only that, they're telling us it's not going to be ready until 2023. What was it? 2023, 2024? So years off. Why are they mentioning this now? And I feel like it's because of the Facebook Libra announcement. Kind of caught people off guard, but now the Federal Reserve is kicking it into high gear. And I think they will be using Ripple technology in order to facilitate this faster payments initiative in the United States. We got this last tweet here from Cryptoken. That's at Kenneth595208888. This just came out from Yahoo, and he posts this here. The UK's FPS hasn't stifled crypto in any way, and neither will FedNow. primarily because the real appeal for cryptocurrencies as payment relies on cross-border transactions. Crypto companies such as Ripple Labs are keenly aware of this. Ripple, in fact, has built a multi-billion-dollar business using cross-border payments as the chief use case for its token XRP. Interestingly, instead of being threatened by the Fed's efforts, Ripple has been actively helping the bankers develop a faster payment system since at least 2015. And Ripple's global head of infrastructure innovation, Dilip Rao, seemed curiously excited by the Fed's announcement on Twitter, prompting some to speculate about Ripple's potential involvement in FedNow. Rao has since put those rumors to bed, cautioning eager XRP holders not to read any more into his comments. But if Ripple, which ostensibly stands the most to lose from a Fed-driven payment system, is at the very least not bothered by it, then that tells you all you need to know. It's those little hints, guys, that we should be paying attention to and getting excited about. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.